Welcome back to the Stock Guy Analysis. Today we're doing a really fascinating deep dive. This sits right at the intersection of law, global finance, and disruptive technology. We're not looking at a new protocol today. We're looking at something much more foundational. This is about how a single piece of UK legislation, the Property Act of 2025, is creating a powerful, bullish ripple effect across the entire crypto market. We're going to zero in on how this legal clarity stabilizes Ethereum. And then, maybe surprisingly, how that connects to a major opportunity in one specific publicly traded company. Exactly. Our sources here are very focused. We're looking at market analysis, detailed legal commentary from UK industry groups, and current stock data. These are mid to late December 2025 numbers for Bitmine Immersion Technologies, BMNR. The mission for you is simple. We want to shortcut all the complexity. We're distilling dense legal theory and financial data into one clear picture of opportunity. Yeah, how does a dry legal principle translate into real market upside? That's the question. Okay, let's unpack the act itself. This is not a minor tweak. It's a major structural change to property law across England, Wales, and Northern Ireland. After receiving royal assent, it officially came into force on December 2nd, 2025. That date matters. But most people probably think UK courts already treated crypto as property. So it actually changed. Why are industry leaders calling this one of the most significant legal reforms in centuries? That's the key distinction. We moved from common law to a statutory foundation. Before this, you had to rely on precedent. Judges ruling case by case. Slow, expensive, uncertain. If your facts were slightly different, you could lose. Now the law states it clearly. Digital assets, cryptocurrencies, stablecoins, NFTs are legally recognized. They form a third category of personal property. A third category? That sounds important. It is. Traditionally, personal property had only two classes. Chattels, physical goods like cars or artwork, and choses in action, intangible rights like debts or bank balances. Crypto never fit cleanly into either. Exactly. This new category removes ambiguity entirely. Ownership is clear. Enforcement is clear. Legal protection is clear. It's like moving from a verbal agreement on a house to holding the official deed. Perfect analogy. Theft recovery, inheritance, bankruptcy, all of it becomes streamlined. And this is where institutions enter the picture. Legal uncertainty was the single biggest barrier. This act slashed it overnight. And critically, it enables crypto to be used as collateral in mainstream finance. Before, using billions in ETH as collateral was legally questionable. Under English law, that hurdle is now gone. The UK just opened the door to deep financial integration, which brings us to the market reaction. Ethereum saw the biggest sentiment shift. But interestingly, no massive price spike. No hype-driven pump. Instead, Ethereum stabilized after the mid-October wipeout. That's the insight. The act created a floor, not a spike. Confidence showed up in derivatives, not spot price. So what stood out? Ethereum futures open interest, specifically Binance perpetuals. Open interest rose about 2.94%. That pushed total open interest to $60.75 billion. And that matters. Rising open interest with stable price means institutions are positioning for upside. They're confident the legal rug won't be pulled. Exactly. ETH price action confirmed that stability. Around $2,980 on December 7th, hovering between $2,900 and $3,100. Around $2,969 by December 21st. Controlled recovery. This legal clarity strengthens Ethereum's long-term appeal, especially as collateral. That's a gateway to global finance. And that brings us to the stock. Bitmine Immersion Technologies, BMNR. Our sources identify this as a prime beneficiary. Why? Because BMNR is now a pure-play Ethereum exposure. They're no longer an ETH miner in the traditional sense. Their strategy is accumulation and management of Ethereum. Their treasury holds approximately 3.97 million ETH, valued at roughly $11.83 billion at the time of analysis. That's massive. So when the UK legally solidifies crypto as property, that entire treasury becomes more secure overnight, without BMNR doing anything. That's why the stock reacts so strongly to regulatory tailwinds. And we saw that reaction. On December 19th, BMNR closed at $31.36, up 10.3% in a single day. Volume exceeded 46 million shares. That's institutional movement, and it's driven by reduced risk. If the underlying asset is legally shaky, the stock is riskier. When that risk disappears, professionals step in. And we saw that directly. ARK Invest added approximately $25.4 million in BMNR shares. That's a strong signal. It validates BMNR's strategy. The stock shifts from a speculative proxy to a de-risked asset play. But this isn't about a one-day move. It's about structural change. First, enhanced treasury strength. Not just value, but enforceability. In worst-case scenarios like insolvency, those ETH holdings now have clear legal standing. Second, financing flexibility. BMNR can use ETH as collateral more effectively. Attract UK and EU capital. Lower cost of capital. Less dilution. And that brings us to valuation. The market may be mispricing this. BMNR's market cap sits around $13.35 billion. ETH treasury near $11.83 billion. Very tight gap. PE ratio around 2.34. Extremely low. Some ask, why compare this to tech? Because they operate infrastructure. But the low multiple shows the market still treats them as an asset proxy. Legal clarity should justify multiple expansion. The risk premium just changed, and future liquidity follows. Analysts estimate this certainty could attract $10+ billion into UK crypto markets over time. BMNR is the most direct public market leverage on that flow. So what's the upside? Conservatively, if ETH rises 10 to 20% over the next few quarters, BMNR's treasury appreciates by $1.20 to $2.40 billion. That alone could push the stock toward $40 to $50 by Q1 2026. And that ignores financing benefits and re-rating. Remember, BMNR's 52-week high was $161. This shows the leverage when sentiment turns. The UK Act reduces downside risk. It creates a regulatory feedback loop. To wrap it up, the UK Property Act isn't a price catalyst. It's a structural tailwind. It strengthens Ethereum. It validates BMNR. Legal clarity reduces risk. Reduced risk supports higher valuation. And it positions the UK as a global crypto leader. This is groundwork. More regulation is expected by 2027, and that only amplifies the setup. So here's the final thought. If crypto is now legally viable collateral under English law, which traditional financial products get tokenized first? Mortgages? Corporate bonds? That's where this is heading. If this breakdown helped, don't forget to like, subscribe, and turn on notifications. You won't want to miss what comes next.